in our discussion, what we will analyze is any company or even any stock which you analyze from today. You have to first think what exactly is the trend of the stock, or even to keep it very, very simple, you need to assess in which stage the stock is, right? So this is not completely into technicals, or this is not into a jargons which I am going to discuss. What I am going to discuss is in a very simple language we'll be discussing. But yes, going forward, any company you observe, you need to give a tag to it, whether it is in stage 1, whether it is in stage 2, whether it is in stage 3, or whether it is in stage 4, right? So it is a pictorial representation you will be giving. So let me share my screen and I'll tell you what we are going to discuss, right? So any company which you are analyzing or which you are investing or which is already there in your portfolio, right? So assess these companies into these 4 stages, right? So the first stage called as neglect phase, right? Or the stage 1 is called as a neglect phase or consolidation phase. So every stock has a cycle, right? So yes, this, if you see, this is the entire cycle of the stock, right? The first stage when it starts, it's like an introduction stage, or it's like a neglect stage where no high action in the stock will be happening. Second, advancing phase, right? This is the stage which is very, very important for us, or this is the zone called as accumulation phase. Means whenever a company or whenever a stock which you have invested, it has started its upward momentum, and yes, every day or even in the last couple of days, in the last couple of weeks, it is building up strength and it is growing. This stage falls under advancing phase or accumulation phase. Stage 3, topping phase, we also call it as a distribution phase. And yes, this is the phase where the institutions are heading from the stock, right? These are the stage where the institutions are heading for exit. And stage 4, declining phase, or even a capitulation phase, right? Do not worry about the technical terms. Technical terms, capitulation phase means this is the phase where the stock is continuously falling. So what are the 4 phases you have learned? Yes, going forward, any stock which you observe, or even any company or any stock which is already there in your portfolio, these are the 4 stages that should come into your mind, right? So yes, this is your stage 1, right? The neglect phase or the consolidation phase, or it is an introductory phase, right? The starting phase. Stage 2, advancing phase, right? This is called as accumulation, or yes, this is the phase where we average up, right? This is the phase where we average up. Just check whether the stock or the company which you are analyzing, or even the index wherever you are investing, is it in stage 2 or not? Accumulation phase, advancing phase, where we average up, right? We add into the strength. Third phase, this is the third phase, right? This is topping phase. So yes, the stock has reached to a level, and yes, it has been performing very well for the last 1 year, the last 1.5 years. It has given a very good results, right? The kind of an earnings the company has declared are very, very strong, right? So yes, after a period, it will be in the stagnation phase. It needs more energy to further go ahead, or it is not catching up with the particular numbers what they are delivering. It has to fall, right? So this is called as the topping or the distribution phase, where institutions will head for exit if it is not able to over deliver, right? So yes, the chances are from here it can again go into stage 2, like your advancing phase, or it will dip down, right? This is called as stage 4, declining phase, right? So yes, any stock you analyze or any stock you ask me in any of our future sessions, right? You have to tell which stage is the stock. And what is the importance of doing this stage analysis? If you see the declining phase, you feel, sir, yes, I am entering into a stock and it is continuously falling. It is okay. I love the stock. I'll hold the stock for a couple of days, it will rebound. The problem is, see the chart, right? See these numbers. I hope everyone are able to see it, right? Whenever in your portfolio a stock is falling by 10%, it requires 11.1% to come back to even. Yes, if you are losing 30% in a stock, you need 42.9%, around 43% just to recover that 30% loss. So please remember, compounding works in your favor. Similarly, when you're accumulating losses, when you're investing in a downward company, when you're investing in a company which is continuously falling, that will also compound in your losses, right? Whoever feel, sir, it is okay, I just lost 50% in a stock, I can get it back. You need 100% profit to just come to even, right? If a stock is lost by 50%, until and unless it gives you 100% gain, you can't come to even. So yes, losses works against you. So what is the remedy for it? The remedy is, you have to exit your losing stocks ASAP, right? As soon as possible, you have to exit your losing stocks, right? Exit losing stocks as early as possible, right? As early as possible. So yes, these 4 stages are very, very important. And in these stages, if you look deeper, right? If you look deeper, so this is what we have studied. The stage 1, the starting phase, stage 2, the advancing phase. This is the phase which we would love to be in. Stage 3 is where we'll be very, very careful, distribution stage. Stage 4, yes, we will exit this stage, right? Stage 4, losing stocks, we exit. Now that, as you understood these 4 stages, stage 1 and stage 3 is about losing time. So yes, entering stage 1 or entering stage 3 is not a problem, but yes, you have to give more time. In the stage 1, the company is just starting up, it is just building up strength. So it requires a lot of energy and you have to give time also to start picking up, right? Introduction phase, a company which has started operations, or a company which needs more results to declare, and then it will bounce back. So yes, stage 1 or even stage 3, you are just losing time, right? It's okay if you are there, but it requires time for you to generate the returns from that investment, right? Even stage 3, because it has reached the topping phase, right? It needs to prove itself. It needs to give a very good quarterly earnings, and then only it decides whether it will again go back to stage 2 or it will fall from there, right? And yes, what is the stage which we love to be in? We will love to be in stage 2. This is the phase, right? Stage 2, accumulation phase, advancing phase, we will be in. And finally, stage 4 is about losing value. Sir, the stock which I am investing is continuously falling. Can I exit or not? If you identify that it is a stage 4 stock, if you are here, if you are not exiting, sir, it is here, if you are not exiting, still it will fall down. And this is like a falling knife. What do? We never catch a falling knife. Similarly, we never catch a stock, even though it is fundamentally stronger. When it is continuously falling, we don't catch it, right? We don't add it in our portfolio, right? We don't add it in our portfolio. And apart from this, I will also tell you what are the benefits of entering during the trade. Sir, yes, all this is good. The stage analysis is wonderful, but what is the benefit, right? What is the benefit? First of all, please understand, 98% of your winning stocks make their real profits during a stage 2 uptrend, right? You feel, Sir, yes, this is a stock which is at an all-time high. This is a stock at a 52-week high. But the results, the numbers say 98% of the winning stocks made the real profits during the stage 2 uptrend. Right? Point number 2. This is the stage 2, where big institutes start buying. And as you observe the chart on the stage 2, the advancing phase, you also get volume there, right? Volumes also keeps increasing. So this volume is something no one can hide, right? I'll tell you one thing very, very important. People who are beginners or people who are just learning on the charts or technical analysis, sir, I feel technical analysis or charts is a little difficult. I think I'm not that analytical guy. But let me tell you, a company can cheat on the numbers. Yes, there are companies which cheat on their annual reports. They can even bribe the credit rating agencies. Their auditors can do any kind of an error, or they can be bribed. The CFOs can do all the number gambling. There may be a set of insiders who can do some errors or who can cheat the investors. But volume is one no one can touch, right? A stock's volume, whatever you see below the chart, right, on your technical analysis, no one can touch on it. So a company which is in a stage 2, which is in an advancing phase, and where you see a strong volume, that is the reflection for you that yes, DIIs, domestic institutional investors are entering, FIIs are entering, institutions are entering. So that is the reason charts, technical analysis, you need to understand, and you need to start inculcating that knowledge into your investments process. I repeat, volumes in a chart cannot be manipulated. Everything else can be manipulated. Even yes, price can be manipulated, right? Insiders will be there. They'll just hold all the stocks if it is a low floating stock, and yes, they can gamble with the price, but volume no one can touch, right? So yes, all the beginners or even conservative investors or just some non-finance background, I'm just learning on the chart, learn slowly, but yes, include this in your investment process. I'm sure you will be getting a lot of benefit, because you get to know in the stage 2, big institutions, when they start buying, you'll be able to observe that volumes will continuously increase. And yes, I always stand or sit on the jains of an elephant, right? So if you want to go for a very, very longer period, right, and yes, you want to go very peacefully, I will sit on the shoulders of a giant so that I can go very easily. So when the institutions are buying and you're seeing a lot of volume, so something is happening there. Let me be a part of it. Let us be in the trend. Trend is your friend. And yes, success ratio would generally be higher in the stage 2. And lastly, remember, we never ever target for the lowest price, right? Always remember, your goal is not to buy at the lowest price. Rather, your goal is to buy at the higher price, right? So if you see here, this is the chart. Let's assume, or even let me give you only the stage 2 here, right? Stage 2. So what does this point says? Always remember, your goal is not to buy at the lowest price. Rather, your goal is to buy at the right price. So if you feel, sir, the stock has already moved from these levels, I have observed here, but yes, from these levels, from the lower levels, this is your low, I have missed it. Don't worry about the low price. If you feel this is the right price, how do you know it is the right price? Here also, we see some good volumes that are building up, right? That are building up. So your target is to buy at the right price, right? You enter here with a small investment. I call it as a tranche, right? I call it as a tranche. Tranche is nothing but your investment. You can invest 1% of your overall portfolio. Whatever is your portfolio, maybe 1% or a 2% you can increase. If you feel, sir, yes, that's a good entry point. After that, again, it has moved up. And yes, the volumes I'm seeing are coming up. And yes, again, you add one more tranche. Tranche means nothing but investment, TRANCHE. you add another 1% of your overall portfolio, or you add some 5,000, 10,000 like that, right? So yes, these are the benefits of entering during the trend, right? During the trend. Now, let me give you some practical examples, right? Let me open up my trading view, right? And here, as you see my screen, certain companies, like let me take ITC Limited, right? Let me take ITC Limited. So now, ITC Limited, if you observe on a weekly chart, right? Let me take a weekly chart, right? So yes. So what did you observe here? ITC, after a very long consolidation, right? Or even you can say this is the period where it is like in a stage 1. Yes, from February 2022, it has started, right? It has started its stage 2. So what do you look at? Any company, if you are observing, check first which stage it is, and do not try for perfecting, right? Just learn as you observe more charts, as you implement these things, you will further scale it up, right? You will refine your investments process. So yes, as I observe, ITC is in stage 2. Yes, sir, don't come and tell me, sir, I was not able to buy at the lowest price. What did I tell you? Benefits of entering during the trend. The fourth point, our target is not to buy at the lowest price. Our target is to buy at the right price, right? If you see here, add here, volumes are very decent. Again here, volumes are very decent, right? Here, volumes are picking up and the strength is continuing, right? Even here, wonderful volume, you can again add here, right? So yes, do not worry of just spotting the lowest price. No one can do it, right? Entering into the market for purchasing at the lowest price or selling at the highest price is not our target, right? Is not our target. So yes, we enter during the advancing stage, right? During the advancing stage or during the stage 2, right? During the stage 2. Similarly, if you look at Cholamandalam Investments, right? Yeah, this is also a very good long-term kind of a company, right? Long-term kind of a company. So as you observe, yes, it is in a very good advancing kind of a stage, right? Advancing kind of a stage. So you can add in any of these investing opportunities. Even right now, as you see, the kind of a volume it has built, right? It is still, for the last couple of months also, it has given a very good opportunity. And the best part is, irrespective of the market movement, stronger companies will be giving you results. And yes, the first point when I told you, 98% of the winning stocks will be successful in the stage 2 kind of a segment, right? Stage 2 kind of a segment. Varun Beverages Limited. Yes, you have multiple opportunities for you to add. When you find a stock in a stage 2, you look at adding, right? You look at adding. Now, talking on the contrary part, stage 4, right? Stage 4. Yes, Gland Pharma, right? Gland Pharma. So if you observe here, sir, yes, after this stage 2 of this stock, right? This is exactly in the stage 2 during this period, 2021 levels. And after that, it has been in a stage 3. What is this called? Stage 3, consolidation phase. But when you got a clear reflection from this level that it has started entering into stage 4, don't fall in love with a company. I again repeat, don't fall in love with a company, date a company, right? Don't fall in love with a stock, date the stock. So this stock, Gland Pharma, if it is there in your portfolio, you have already reaped the benefits of these kind of returns. When you observe that it is into the stage 4, exit as soon as possible, get your profits, bag your profits, get out of the stock. Don't let your profits be taken away by the stock market. And yes, whoever have followed the process, even recently also, if you observe, right, it has had a gap down. In the last 2-3 weeks itself, it has fallen down by 30-35%, right? So just to repeat, stage 2, the advancing phase is what we would love to be in. And whenever a stock is entering into the stage 4, we try to exit as soon as possible. Okay. So yes, whoever are beginners or whoever are from the non-finance background, you just start inculcating this knowledge into your analysis. The future companies, what you see, as you do it continuously, you'll be getting a more grip on it, right? More grip on it. Okay. Super. How many of you feel this is a powerful learning?